there. Good morning, good afternoon, and getting ready for good night to all the Forex traders around the world. This is Mohammed Kande, co-founder of Forex Executives, coming at you with a deep and extensive analysis on Australian dollar, US dollar, Aussie dollar right here. Really excited about this week, and I just wanted to take you guys through my process of analysis to give you an idea of what it is that I do to get inside of the market. This is going to be deep, it's going to be extensive, and it's going to allow you guys out there to take a look at the bigger picture, which is what trading is all about. Top-down analysis is absolutely amazing, and when used properly, can trump fundamentals 100% of the time. So I am a technical swing trader, so I like to take 3-to-1 positions, usually looking for anywhere between 100 on pips. I usually seldom get into the market to just get 15 or 20 pips. So just to kind of give you guys an idea of how I operate, in my opinion, I believe that swing trading is one of the absolute most amazing ways to trade the foreign exchange market. And if you learn and grasp the swing trading strategy, I think that it could be lucrative for you over the long run. But enough of the chit chat. Let's dive into the analysis, because we're going to be here for a while. So Aussie dollar. So my primary job, and this analysis is going to be done with absolutely zero indicators. For people who watch my videos, I generally don't use any indicators at all. The only set of indicators that I do use oftentimes is the exponentially moving averages, 10 and 20s daily on up, 110 and 40 on the H4 on down. They're pretty good at helping you identify direction. So let's take a look on a monthly over here. So my primary job when I get onto the monthly chart is to identify what is going on. What is the trend? What's going on right now with Aussie dollar? And as you guys can see, based on this trend line right here, Aussie dollar is in a bearish move, right? We're in a down trend for those of you who are fairly new. So we're on a down trend on Aussie dollar, right? But I can't really see what's going on right here. I don't have the full picture, right? It's you know, I just see a bunch of candles going down, and then if you see right here, we had a few bullish moves right here in between the bearish moves. So it's like, what's going on, right? The monthly usually is not going to give you a clearer picture. So sometimes it's always good to, once you draw your trend line, okay, you've identified the trend, you know that we're going downward. Now let's break it down to the weekly chart. And the weekly chart usually gives you a better view. Fantastic. Here we are on a weekly chart, and look at this, amazing. Okay, now we're starting to have some analysis here going on. So I'm just going to draw up a few things that I see on my end over here, just so that you guys can be with me. So bearish move, I have my bearish trend line, top all the way to bottom, wick, then touch this wick, tap this wick, and just tap last week's wick as well, right? Boom. So if you guys take a look, you have a head shoulder pattern, right, within the bearish move to continue the downtrend, right? This is a valid head and shoulder pattern, okay? So if we would have had an inverse head and shoulder pattern during this downtrend, unless it is at the absolute bottom of a trend, I mean, price is just so oversold or so overbought, then I wouldn't be taking that head and shoulders, right? Because you want to take it within the trend. That's another conversation on the validity of these forms when they shape into the market. So I have this downtrend line that's marked out right here. I have my head and shoulder mark right here. Perfect. I have the neckline of my head and shoulder. Let me adjust I have the neckline of my head and shoulder marked off, right? So I know what's going on, right? And the right shoulder is slightly lower than the left shoulder. So this is a textbook. This is the textbook head and shoulder right here. Textbook, perfect. So I have that, and look at what happened last week. Market came back to retest this trend line and gave us a bearish pin bar. This is a perfect signal. This is a great signal on the last shoulder of the head and shoulder pattern to let me know that it is time for me to take it. Okay, another confluence is right here. Market came down, market came up, market came down, market came back up. That is the letter W that was created. And 99.9% of the time after a W is formed, you have some type of strong bearish movement to the downside. Okay, so that's a awesome opportunity right there. If we place our fibs from the high to the low of this candle. Like, look at that. Look at our negative 27, and then look at our 61.8, right? Right before support at 68.40, 68.54. And you know that price is trading around a very strong support area here too at 70.36. But I believe that we're going to break that support area, and that market is going to keep pushing to the downside, right? This blue line right here represents a 50% retracement of the weekly candle. And just to show you guys this, let me go back to the monthly so that way you can see it as well. The market does this a lot, and this is something that I employ in my analysis. It is called a 50% retracement of a bearish or a bullish candle, right? So if you guys take a look right here, let me do this right here. If you take a look, if you look at this bearish monthly momentum that we had last month, what did price do at the beginning of this month? Look, price went all the way up and did a 50% retracement of this monthly candle right here. And then price began to shoot down. A 50% retracement by itself will help you get absolutely amazing entries. I want you guys to go ahead and back test this. 50% retracements are absolutely amazing. So we had a 50% retracement of the monthly candle right here. Price began to shoot down. And if you take a look here, after this weekly candle, I'm looking for a 50% retracement of this weekly candle as well, right? Okay, that's going to create the wick for next week's bearish move, right? Now, let's push it on down to the daily. And let me take out this extra stuff right here. So as you guys can see so far, we're breaking it down, right? Now we go to the daily. We go to the daily, and look at that. So if you go on the daily, you see my head and shoulder pattern right here, right? Right? We're on that last shoulder, and then this is a complex head and shoulder pattern, right? So because we've had head and shoulder patterns within head and shoulder patterns. Look, you have this is the overall head and shoulder right here, and then you have another head and shoulder right here, right? So you have so you have a head and shoulder inside of a head and shoulder complex, right? And look at market. Look at market respecting our trend line. Look, 1 tap, 2 tap, 3 tap. Almost came and tapped it right here. I consider that a tap as well. And if you guys look at this blue line right here, this is my daily, my weekly 50% retracement. Now I had a nice channel drawn up right here on the daily, right? Where price was respecting this channel up all the way up to our daily trend line. Market finally broke this channel. Remember guys, my golden rule, no retest, no entry. So I'm looking for price to retest over here, and then to get a shot down. That's a high probability trade. And then to get another shot down right above, and possibly all the way to the bottom of this wick right here. Because if you take a look at the head and shoulder pattern, we go from the high to the low of it. That's how you measure the distance, the likelihood of price going that way. So we come back, and you got price coming all the way down to 66.69. Me, I'm a safety kind of guy, so I'm gonna ride it all the way back to the bottom of this wick, and that'll be where I'll be taking my last TP. But as you guys can see, I'm looking for the market to push back up at the beginning of the week, do a 50% retracement of that weekly beautiful bearish pin bar that we had, and then I'm looking to take price right here and bring it on down. All right. Now let's go down to the 4 hour to perfect our entry. Bear with me guys, I'm trying to get rid of, there we go. Boom. Now let's go to the H4 to perfect our entry. All right. So look at this guys. So we have our channels right here. All right, we have our channel right here. So I'm looking for price to do a little bit of pushing up. And what do we have on the H4 right here? Absolutely beautiful. You see, guys, my job, I'm a detective. My job is to have as much confluence as possible before I get into the market. And what do I have on the 4 hour right here? I have a head and shoulder pattern that's forming. And if you guys take a look at this 50% retracement right here, which is a 50% retracement of the weekly candle, if price were to come all the way up here and created the right shoulder will be lower than the left shoulder according to this 50% retracement right here. That's what's beautiful. That's what's absolutely amazing. So this is the setup for my entry right here. I'm looking for a bearish signal in this area right here at 71.16. This is where I'm looking for a bearish signal, okay? So let me show you guys this. Absolutely amazing. So we're gonna take a short position here, right? And we're coming all the way down here, right above this that wick right there. I'm not looking for, I'm not looking to be greedy. I don't care about being greedy. And we're gonna put our stop loss right above this this trend line right here. Okay, so you're risking 30 pips, let's say 30 pips, just to be on the safe side. You're risking 30 pips. Risking 30 pips right here, 31 pips to get 363 pips. Okay, absolutely amazing move. Absolutely amazing move. Even if someone comes and takes profit right here, that's still a 2 to 1. Not good enough for me, but that's a 2 to 1 right there. Okay, 2.4 to 1 ratio. You come and drive it all the way down here, then you have a 7.95 to 1. That's an 8 to 1. You drive it all the way down here. Okay, that's a 12 to 1 almost. 11.67 ratio. All right, these are the kind of setups that make up for weeks of losses, for weeks of drawdown. These are the type of trades. This is why I swing trade right here. This is a high probability trade that's going to allow me to capitalize and make up for me being a 40% winning trader. If I win 4 to 5 out of 10 trades, then this one trade right here is going to make up for the next 10 trades that I take, because I usually risk no more than 3%. So this is an amazing setup right here. I'm extremely excited. I hope that this helps everybody that watches it. If you have any questions at all, don't hesitate to hit me in a comment. Don't hesitate to DM me on Instagram. My Instagram is KEOULEN_KANDE. That's my IG right there. You can find me on Instagram. KEOULEN_KAND. Guys, hit the like button, hit the subscribe button. Extremely excited to have you guys a part of this small little Forex Executives family that we have here on YouTube, and I look forward to assisting you guys in any way that I can. Happy trading, and let's get some massive pips this week.